Hey guys, good evening. Thank you for tuning back. And all right, so uh, this is the account that I passed yesterday or last week, or yeah, yesterday. And then actually this is not my it's not my it's not my account. This is my friend's account. Hey kid, you're loud, Najee. So I let him trade a while ago, but I told him not to trade during Asia pre-opening. So he's negative, like he was like negative, almost negative 500. So he trade this setup here, and I told him to trade like after 7:30. And of course, he said he want to trade because there's a clear setup here, but uh, I told, yeah, we should not be trading off before 9:30 p.m. always, because you will not see like a real movement by that time. So okay, let me see what's going on. All right, we're still trending, and as you can see, we have a good setup. We have steel. This is our psychological number for tonight, or psychological level is the 20,500, and this is still the psychological level for today. Um, you see, there's like the price reject here on this level, and then try to retest the 20,500 again. Most likely, a buyer put an order here, and then this caused this trending market, or this trend. Okay, so let's recap our strategy. Still the same. Uh, Nothing changed. Go on the description. So the rules is still the same. During Asia session, we're not trading before 9:30 p.m. So we're just looking for we're hunting. We're start hunting setup from 7:30, which is the Asia pre-opening, until 9 p.m. Uh, at least that's my rules until 9 p.m. And after 9 p.m. we're not hunting anymore. And then at 9:30 we're done trading. So that's what we will do right now. Naji, kid is playing. It's so loud here. Well, let's observe this entry. You will see. I think we I was able to enter on the optimum entry, and Supertrend is still supporting the bear and is still trending up. My kid is so loud. We have okay, fair value gap, fair value gap, a fair value gap. We have a good fair value gap here, but the price didn't feel. Yeah, no, I think it's already filled. This fair value gap with this is a very good entry. I missed this one. Uh, I should enter this in this area because we have a good volume imbalance. when we're rejecting now, we'll see. Okay, are we? Are we not yet there? No, we'll keep this trade. Let's keep this trade. I'm keeping this trade until uh, we have an exit option. Of now we don't have yet, but we already already hit. Actually, we are already 1:2. We have the 1:2 take profit already, but yeah, over there already have it. But I'm hoping for a trend market to at least get the 20,540. This level's been there. Like actually since the opening, the last Sunday, like Sunday Eastern time, we're just hovering around this level, like 20,500, actually 20,480 to 20,000 to 20,570. So I think this is the range for this week. Okay. So let's. So I will recap the strategy again. So we'll do this every time I'll trade, so that you'll get familiarized with the strategy. So this is the setup that I took. This is a good setup actually. First we have the cross here. That's the cross of the moving average, the first signal to buy. That's the step number one. Step number one is the cross of moving average 9 to exponential moving average 21. Uh, so that tells us, okay, uh, it's a signal to buy. And then after that, we have a shift of super trend, which is here. Step number two. And then after that, step number two, we have a displacement. Displacement. Okay, that's a displacement. This is number three. And then after this bull displacement, uh, the displacement created the market shift. It's the market shift here, market structure shift. And then the market structure shift leave a fair value gap, a bullish fair value gap. So supposed to be uh, this is our optimum entry, but I was not around during this movement, and I'm not paying attention. And aside from that, it's before 7:30, and this displacement here, like from this minor displacement to there, I don't have like a true displacement until this candle happened. So these candles break the consolidation and created a new fair value gap. So that's why I enter on this. So I think this is the optimum entry, because of this candle confirms that we have a displacement going to bull side. Uh, but I'm not paying attention actually. And then if I saw this one, this one here. This is I told you last night when we are trading last night that if you see a fair value gap with with a volume imbalance, take that fair value gap, because that's a high probability fair value gap. This one. But if I take this trade, most likely I'll be putting my entry here on the 50%, and I'll be maybe I will not I won't be able to ride this entry here. So but we have a good entry here. with good fair value gap. I put I put my entry on the 50% of fair value gap, which is that's the strategy. And then we have that. Mhm. See, that's the optimum entry. I don't know, guys. My English today is something something wrong with my English. I cannot talk properly. Like I was asleep the almost all night. I almost whole day. I trade earlier. I trade earlier on my mobile while I was outside, and I posted. I think I posted that one. Um, it was a good profit. New York time, New York AM, and I used my Tradobate account, and I have like plus. I think I have a profit of 2,000 plus. And then after that, I tried again to enter the market and I got stopped. I mean, I exit because my exit option criteria is mitigated. So I exit the market with negative 80, but still I have a profit of I think 2,000, mostly 2,100 or 2,200. Yep. Mhm. Okay, so we have a very good trending market. I don't know, Asia market this week surprised me since Sunday. Do you agree? When we trade on Sunday, we have a good trend. And then yesterday I was expecting that the market is bad because I want to give an example on what is a setup, non-tradable setup, or what is a setup that you will most likely lose. And I want to show you how to exit, actually how to exit early to prevent you from risking a lot. But yesterday was a good market, right? It was a good market. We my Asia session yesterday, I was surprised. I was able to pass the I was able to pass the this 50K Express yesterday. And now again, uh, if you notice, we started here. Now we still don't have the true what you call that, the ATR, average true range. We still don't have. Now it's still the market is still trending up. It's still trending. So from this move, I thought this will be our I think still this is our consolidation range, and this is a very good consolidation range because it is wide. It's almost like New York PM session, right? So it's a tradable consolidation. You will have a good setup, and you will have a good entry on this range. You see how many ticks it? I think we are up to more than how many? We're up to 30 ticks already, or almost. Yeah. So the the market is doing great, but I want to see the price break this level here. And if we break this one here, if you are support and resistance trader, if we break this 20,530, I think, or yeah, on this level here, this resistance here or this liquidity here, whatever you call it, because support and resistance and liquidity, I think they are the same for me. If we break this one, I think I'm guessing the price will go further to this psychological level, 20,570. Actually, not that one, sorry. This is more psychological number for me. So, yep, I'm not inventing this psychological number. I read it somewhere. I think one of the book, the trading book that I've read, like about trading book about. I forgot that book. It's been a while. Um, it's a the author is a Filipino, so something about plant growing, everything like that. It's about the stock market. So I think this is my psychology. For break this one, I'm guessing that we will able to like hit this high for tonight for this market, for this Asia market. That's what I'm guessing. But if we fail to break this one, so this will be our consolidation. This will be our consolidation. This one, this area here. Most likely from this from this psychological level, this will be our new consolidation zone from this level to this level. So we'll see the market will like go up and down on this level until London session, most likely. Okay, that's what I'm predicting. But right now, we're still trying to break this area here. Uh, do you agree? Um, I'm not looking for, actually, I'm not, I'm tempted to look the order book, but I don't want to because it will affect my judgment. But I'll be keeping this. I told you like I want to trade like a robot, so whatever the strategy tells me to do, I will do. Uh, let's see. Now, we don't have an exit yet aside from the 1 is to 2. 1 is to 2 risk to reward ratio. We already hit that. Uh, and tomorrow is Wednesday, right? So tomorrow is a good. Mm, I hate Wednesday. I told you Monday, Wednesday on Nasdaq or on Nasdaq and ES. I don't like Monday, Wednesday. Uh, Tuesday, Thursday, and Friday is my favorite because it's a trending market with a low volatility, but it's trending market, high volume and low volatility. I like that market because our strategy worked best on that kind of market price action and market structure. Let me say, I'm thinking of what else I can share to you. Um, because I almost give all about this strategy, like everything. I'm super transparent of my trading activity, at least on the one that I'm using on the live. I just can't share my, my personal account or like Ninja Trader account and my Forex account for privacy. But I'm using, I'm trading like I'm showing you my balance, my P&L, everything. I'm showing everything, and I'm not like just showing my wins. I'm also showing my loss for transparency. I'm giving everything, like all of the indicator that I'm using, all of the strategy that I'm using, everything I know about trading. I'm giving it all. I'm giving it all to you. So it's up to you to use it. If you want to follow it, it's okay. Go ahead. If you want to improve it, go ahead. Go ahead. If you don't like it, it's up to you. But I'm telling you, if you backtest this strategy, um, will give you some profit. And based on my experience, I'm telling you times and times, like many times, that the only weakness of this strategy is the user, of course, because we're just a human, we're not a robot, and then consolidation. But there is a consolidation that is tradable and a consolidation but non-tradable. And I've shown you that this consolidation here is non-tradable, but in general, we are still on consolidation. If you go to like 5 minutes time frame, and this is tradable under 1 minute. And we are only using this strategy to scalp, and our time frame is less 1 minute down to 15 seconds. If the volume is high, you can go further down to 5 seconds. Like for example, the one I have today, 9:30 a.m. The trade that I have today is high volume market, and then on a 1 minute time frame, I don't see fair value gap. I don't see an optimum entry for me to enter the market. So it's like a critical thinking and fast decision making that once once the market opens, and if you don't see within like 2 minutes or 5 minutes, if you don't see any setup, go and look for before the market will move abruptly. Go down to 15 seconds, 30 seconds. Look for an entry or optimum entry fast, and then once you have it, don't think twice. Once you have that, like for example, you have the step number one, the moving average cross, you have the super trend, you have the displacement. The only thing left is for you to enter the market, but you don't have the fair value gap and you don't have the optimum entry. Then go down to 15 seconds, and if you see anything there that tells you to enter, go ahead and take that trade. and then put your stop loss to a minimum minimum that you can. And then if you really want to uh, if you want to really if you don't want to lose a lot during the during the New York session, use micro, use 4, use 2, so you can, yeah, control your like have a what you call that, management risk. So that's the most important. And the one tells you to so if you're asking, supposed to be how much you will risk in a trade. In order for you to identify how much risk you how much is your risking, so there is a factor to that. Number one, of course, is the market structure and price action. uh, Market structure is that involves the volume, involves the volatility, involves the manipulation, and the, the general features of the market. So if the market is high volume and volatile, of course you don't want to use mini, right? Because you will end up like having, if you like for example, if you I'll give you an example after we were done with this trading. But because the volume or the candle is like tall, they're wide, so your stop loss will be also wide, right? So you'll be risking a lot. So instead of using mini, use micro, and then so that to determine how much you will, like for example, my tolerance is only below 400. So if the market structure tells me that if I use mini, I will be risking 1,000 or more than 400, I'm going to use mini. I'm going to use micro. So we will exit this market, uh, and then we can re-enter. So they already crossed. You see? So now we're shifting. So I was late. Now this will be another setup for us. Let's see. So this is what I mean. I'll go down to 30 seconds because we have a high volume. And I'm kind of late, not yet late, actually. We'll go down to 15 seconds. Now, we're in 15 seconds, we have a cross there. And then, let's see if we can have this fair value gap here. If we have this, we will enter the market, if we have this. Uh, we'll go first, take one, and then you put your stop loss there. And then, if, now here, this one here, this one, put it here because this high probability fair value gap. Let's see. Okay. Uh, there's a series of fair value gap here actually. I'll show it to you. And I'm afraid that this could be like a continuation. Let's see. Let's see the fair value gap. And then this one is not fair value gap. It's already nullified. Let's draw our Fibonacci. Okay. Let's go back to 1 minute. All right. So that's what I mean. And actually, we have a bad. We have a displacement. We don't need to go down because we already have here. Our entry is too early. My entry is too early actually. Minimize risk. And I will try to enter the market here. Let's see. Uh, well, we will not know if we will not try, right? Okay, and then I'm guessing that this will be our take profit. 20,500. We failed to go there. Let's prefer to go there. So uh, it's a quick decision. I went. We were in 15 seconds earlier when I put this entry, right? It's a quick decision because this is a sell out. It's a sell out. So why I enter the market with one position? I enter here because of this. This could be a void on a 1 minute time frame, and most likely the the price will not try to, hit our optimum entry where I put this one. So, to secure to secure the movement, I enter one, and then after that I'll put a sell limit here just in case the price will try to hit that and then go back. And then we're not risking a lot. We're only risking 165. And once the price will continue to go up, most likely we will lose like 200, 250. But before that happens, I will see some crossing of the moving average 9 to smooth moving average 10. And let's go to 1 minute. So 1 minute is still promising. Let's see. We'll see. So do not hesitate. Just trade like a robot. 'Cause so we have this is a high probability fair value gap. But on a 1 minute time frame, we haven't crossed yet. But we already have a good displacement. That's why I went I, uh, I went to 15 seconds or 30 seconds immediately just to see if we cross already. So in 30 seconds, it's more beautiful view, right? 30 seconds is more fantastic. So let's analyze this properly. 30 seconds is beautiful. We have a market shift here, and it was created by the displacement. And that displacement here, it's so beautiful displacement. I like this one. Uh, I hope I went. So this is, you see, we have that. So this is the this is the true fair value gap, and I will explain to you why. I posted a video explaining the optimum entry and the fair value gap that we will consider a high probability. So this one is a high probability fair value gap, and it's a fast it's a fast move. So I won't probably sometimes it's impossible to catch, but this is a why this is a high probability fair value gap. It's because this fair value gap is a displacement candle caused by the shifting that caused shifting of the super trend, and it's not that wide. And as you can see, the price tried to retest this one. So it's 30 seconds, so it's fast. So most likely, if I was able to catch this earlier, my entry should be here. My entry should be here. Should be here. So that's the reason why I don't do live during New York session, because the market is so fast, and I cannot concentrate like trading while talking. Uh, hey, Max Steel. So that's why I'm not doing a live session during my my New York session, because New York AM session is my bread and butter. So it's where I get my it's my way of living. I like where to get uh, to pay. That session gives me a lot to pay bills, to pay my cars, my mortgage, everything like that. So yeah, sorry, mortgage, my rent, because so yeah, and then gives me a lot to support my family back in the Philippines. So that's why I'm 100%. My concentration is 100% during New York AM session. So yep. So this I will repeat. This is the high probability fair value gap, and we found it under 30 seconds. So now we are in 30 seconds. So we need to go back to 1 minute, because on 30 seconds, the option to exit will happen many times. So we don't want to exit like prematurely. So let's go to 1 minute. And 1 minute is still, this is the time that 1 minute, we have the cross here for 1 minute and shifting. So all of the criteria now is uh, we have all the criteria to enter the market on a 1 minute time frame. But the reason why I will not be, maybe because uh, we are our range is just, it's not that like wide. wide as like the New York session. So, uh, but if the price will go back, if I see a consolidation for a brief period of time and we'll go back to this area, most likely I will add one more. I'll add one more here. Let me see. But this fair value gap here is low probability because it's already tested once for this one here. It's already tested once by this candle, and after that, there's a after testing, rejected strong. So we'll see. I'm thinking if the price will hit this 50% of fair value gap if I enter the market. I'm not sure. Um, yeah, why not, right? Why not? We're not risking a lot. We're not risking a lot. So let's see. And then now let's remove this one here, and then let's put our stop loss here. Okay, so now we're not risking a lot. If the price will hit this one here, we're not risking a lot. We're almost break even already, right? Okay, there, we're in. Let's see. This is the second retest. I'll see about that. Okay, so it's a second retest. Married twice already, so we'll not use this anymore. Also, same as this. This is done already. Look at that. Oh, I'm glad I. Beautiful, right? Do you like it? Do you like the movement? This market is beautiful. Our strategy is working so well. Okay, let's see. I'm guessing that the price will at least go to this area. Okay. Huh. Okay. Um, I'm waiting for a fair value gap to appear. If we have a fair value gap on this area here, then I'll put my stop loss to break even. And our option to exit is still so far, but I'm afraid that I think we will have a short consolidation, uh, as evidenced by this, super trend is starting to. So maybe we'll see a short consolidation for, let's see. We'll see short consolidation by now. Uh, this mark as a short consolidation. Yes, baby. Yes, kid. Yes. What do you want? Come here, come here. Let's see. Maybe we'll have a short consolidation on this zone. I think we no. Let's see. If we break this one, I'll be out. We already break this one. Oh, so okay. Okay. Let's wait. Uh, let's wait. We'll go out for a while. Let's wait for a good setup. What is this? You cannot eat this one. Come on. Come on, come on, come on. Oh, you cannot eat that one. Okay. So let's wait for, we are on a consolidation, like a short consolidation. I will wait for a setup until 9. We'll see. For a setup until 9. It's better to get out and then enter again once we have a setup. Anyway, we are just scalping, so because maybe we will have a continuation setup to take this 20,550, or we will have a break of this brief consolidation. And if we break this psychological level, I'm guessing a continuation down to 20,480, but I don't think so that will happen. But if I have a setup that will form here, then I will enter the market. And if I have a setup that will form here, I will enter to sell. Okay. Okay. Now, let's see. I was able to I was able to minimize that loss that we have earlier. Uh, I will at least I will make this account at least positive 3,000 before I will hand it over to the one who asked me to pass this express account. And then after that, I will have another combine for for the purpose of having for the purpose of the YouTube live. After I'll give this account to him. Um, Honestly, he paid me 100. He paid me 100. He said that he will pay me 100 if I will pass this 50K. But I told him no, I don't need that. I'll get the 50 though, so that I can enroll for another express for a next, after I pass this, so that we have something to use on a live session. But I told him, okay, I'll make like I'll at least positive 3,000 for this, and then after that I will hand it over to you. But earlier he tried to trade, but I told him not to trade before 7:30 p.m. But he didn't listen. Sorry, my friend. And then he's negative 400. What do you want? Hindi ka na magkaon na mo. Alright. Stop that. Here's your apple. He wants apple. Okay. Still waiting for a setup. We're on consolidation and we did not break yet any of the upper and lower consolidation. So let's wait for a setup and then we will enter again. So still have a time, but after 9:30 I won't be trading. Uh, yep. I don't want to spend a lot of time on a screen because uh, if you spend a lot of time on your screen or on trading platform, you'll end up like tempted to enter the market. And then we're one of the things that you must avoid is over trading. We should not over trade. Uh, Stop that. Here's your apple. Take apple. All right. What happened now? Okay, I'll go back to my screen. So we're still consolidating. The market stopped moving, and so you see, um, I'll give you some tips. Market is it's predictable. It's predictable. It's like an algorithm. We will have a brief consolidation, and then after that, a displacement either to up and downside or Someone call it manipulation, and after that distribution. Uh, After that distribution, brief consolidation, another manipulation, uh, like this. Now we'll see. Here we have a brief consolidation, and then after that a little bit manipulation, and then we'll start to distribute, and then manipulation, distribution again, and then consolidation. So let's wait for a displacement. So me, I don't use the term because I think I don't use the term manipulation because manipulation can be like sometimes a displacement. So because I'm just hunting for a displacement for an entry. So right now, let's see if we have this cross, we will have now we will have let's see on 30 seconds. So we don't have enough volume. I will use 1 minute. Okay, we have now a displaced candle, but our super trend is still bearish. So I don't want to enter this trade. But if you are like, yeah, if you want to risk, I don't know. This could be a continuation. But if this super trend will shift to bull, I'll probably enter the trade. So I will follow this strategy no matter what. Almost there. I have like 30 minutes to go. 33 at least for the setup hunting. I think I I'm afraid to enter this fair value gap because nothing is super trend is not supporting. Although we don't have a cross yet, but let's see. It's a perfect ICT setup. It's an ICT setup, liquidity grab, minor liquidity grab, major liquidity grab, displacement, fair value gap, ICT setup. But I'm not an ICT trader, and yeah, it's a perfect ICT. I wanna try this. I'm tempted, but I'm breaking my rules if I will use ICT by this. You see, right? It's a liquidity grab. You see, if I it's not really ICT is not really reliable. Liquidity swept. Uh, and there is another minor liquidity. Now I'm teaching ICT. And we have a displacement, fair value gap, but fair value gap is nullified. So that's why I don't trust ICT. This is a perfect ICT setup, and then you see, almost if we enter that trade for ICT, stop loss should be here. Mm. Now we're near to our stop loss. Okay, let's see. Assuming this is an ICT trade. Actually, no. Sorry, ICT, but if this is you see, if we failed. This is an ICT trade. This is the, this is the, you're supposed to enter on this fair value gap. Sorry, ICT. But I think your strategy is still good, but I just can't trade it. Oh no, it's not. See? So that's why I will not trade ICT anymore. Right? Not a nice. So it's okay. It's a continuation. It's a continuation. Let's see, let's see, let's see. Perfect. It's a continuation setup of our. Oh no, this is a. I like this one. I like this one. And I hope if I like this trade. Mm, let's see. Then I'll be entering too. I think it's too far. I think we won't be able to catch this, but it's fine. It's fine. If we can catch it, then we will not catch it. Nothing wrong with that. And then let's see. Put okay. All right, and its stop loss should be here. And yeah, we're late, and it's fine. We will have another setup once we cross this level here. And then maybe there's another setup, and I will enter the trade. Mhm. If you left by the market, don't chase it. You know, don't chase it because if you enter here, you'll be risking a lot. So wait for the price to come to you. That's how you trade. So patience, patience, patience. So it's perfect, perfect one. A continuation set. If I hold the trade earlier, I will be like neg. Uh, this is my stop here. Oh, here. If I hold that one, so it's fine. We'll wait for it. I promise you. The market will feel this area here before going down. Oops. Uh-huh. Now we have a displacement to the continuation side. Minor break market structure, breakup structure. No, it's just a breakup structure. So let's see. A breakup structure. It's a breakup structure. Let's remove this thing. So I won't be breaking anything. I'll keep my order here. Let's see. Because think we'll start to consolidate back. And then at 9 o'clock or 9:30 we'll have. Yeah, but I don't trade after 9:30. Okay. All right. I don't know if still watching, but Asia market is like, someone told it's like you're painting it's like you're watching watching a paint to dry, right? Yeah, it's like that. Okay. What do you think, guys? What do you think? We form a new consolidation again. I think it's still valid. This consolidation is getting wider and wider. So that's how if I have a multiple fair value gap, like for example this one here, it's a beautiful one. If I have a multiple fair value gap like that, it's a fair value gap. Multiple fair value gap. And this one is a good one. We have a multiple fair value gap, and the fair value gap we have here is with the presence of volume imbalance. If I have this one, someone asked me where will I put my entry. So uh, you, in order for you to know where to put your entry on this high probability inefficiency candles, you draw your Fibonacci premium and discount, then put your order to the 50% of that combined fair value gaps. Yep. So that's how I use a multiple fair value gap, considering it is not that wide, or the inefficiency or the gap is not that wide. So that's what I use. But if you see a candle that's so wide with, and then another next candle that's so wide, like a multiple fair value gap, but they are wide, they're not a fair value gap. They are a void. So although the idea of fair value gap or the inefficiency gap, it's inefficiency, right? So like this one here, why we have this why we have this one, because we don't have a trading activity here. So those people who sold or sell here, like there's no buyer that counter the sell. So that's why and then there's more seller than the buyer, and as evidence of this in volume here, I like volume imbalance. So that's why we'll see some inefficiency candle or fair value gap, or displacement, or whatever you call it. So that's the reason. So the price will always try to fill that gap or retest that gap before moving down. Not most often than not, that's what the market will do, or that's what the price will do. Price action will do. And if you see a volume imbalance, instead of retesting that volume imbalance, it's other way around. Like the market will fill that gap, and then it's not reliable to use that as an entry if you only have like a volume imbalance, because the price will not retest that one, like fill that gap, and there's a tendency that after filling that gap, price will continue to go up instead of going down. That's the difference between the two. And now continue to go down. That's supposed to be a good entry here, but it's okay. It's fine. Uh, Leave it there. So that's how you use a fair value gap. So a fair value gap, the difference between fair value gap and volume imbalance, let's remove this so that you can see. Okay. This one here is a volume imbalance. So if this narrow later on, I'm pretty sure this will be filled. So the difference between fair value gap and volume imbalance is fair value gap price will tend to retest that before going down or going to the continuing to go to the direction. But the volume imbalance price will feel that, but not try to retest it. Sometimes will go like continue to go up rather than going back down. So but if you have like a volume imbalance inside the inside the fair value gap, so the price will be attracted to that, and then after that, fair value gap will push the price down instead of going up. So that's why I really like to have, but because of this high probability fair value gap here, that's already mitigated. So price failed to fill that gap. Yep. Yeah. Now I'll ride this market because we already have a displacement. Let's see. Let's see. I want to see where's the where we close. Close here. Okay. Uh, this is beautiful. We have a fair value. Okay, I'll ride this market. I'll try to ride this market. Put my entry there. only one because I'm not sure. And our stop loss should be here if we, and then we're continually creating like a volume imbalance. You see that? That volume balance. We have volume balance there, and the market start to feel that. The price will feel that this imbalance here before going down. But I'm thinking the price will try to take this, fill this gap here, maybe. What are you doing, kid? Let's see. Let's see. Okay. We already take this fair value gap here, so it's not a high probability fair value gap already. It's been tested like 2, 3 times or 4 times already. Okay. So this is done, at least for now. And I think the price, the price will try to fill this gap here. So we have a volume imbalance inside fair value gap. Uh, this one here is still not mitigated, so it's low volume and narrow market, and this is dangerous actually because most likely we're still inside the fair value gap. I mean, we're still inside the new consolidation now. A while ago, the consolidation is here. Now we do have this one here, but I'm afraid of this entry. But I will enter anyway. I'll keep this only one. I'm not risking a lot. Uh, yeah. So this is a new consolidation. It's a break of structure. So the fair value gap is stronger than this volume imbalance because it's not that wide. Okay, I will stop. Yeah, we're too down to this area to sell. Let's not be greedy. Yeah. Okay. I want to see this level here to be this area here. If we break this psychological level, and if we will not see any candlestick pattern for reversal, then most likely we'll continue to go down to 20,450. All right, but I'm almost done. I'm done trading now. I'll not enter the market anymore. So I'm okay having that 171 loss. I don't. That's fine. Anyway, this is not the real market for me. It's just an Asia session. So for the purpose of practicing this one here, our strategy. All right. Uh, okay. I hope you learned something. Um, so if you still if you still trading, like you want to trade until like 11 p.m. So this is my analysis based on my strategy. If we break this one, and we will have a good displacement candle, and you have a fair value gap, and then you will not see a reversal pattern, like candlestick reversal pattern, most likely price will try to reach this level, this 20,450, most likely. But I'm hesitant to enter the market here because we still, like, we failed to break this many times already. And there is a order. This is a order block before this move, and then try to take that over block. order block or demand, and then went back there again, and we just take the order from 20,530 to go here. So I want to see the price to break this and at least have a pullback created. Will create fair value gap, a high probability fair value gap, and that could be your entry for for a move to continue down, most likely to this level. But I'm not really sure, of course, because I cannot see the future. But yeah, so most likely we will bounce back up again, or keep on bouncing up until the big market will enter the big traders will enter the market, and that is when the London will open, which is 3 a.m. Eastern Standard Time. So the true movements will happen then, most likely earlier. Maybe we'll see some movement, like trending movement before 3 a.m., like a pre-opening range of London, 2:30 to a.m. or 2 a.m. Maybe we will see, or maybe we will see 12 a.m. move. Sometimes 11 p.m. after the Asia opening, 11 p.m. will create a good movement also. So yep, but I'm done for tonight. I don't wanna. I'm done trading. So thank you so much for tuning in. I have 171, and I'll trade. I cannot trade later. Wednesday, I don't trade Wednesday. So I will resume tomorrow night. Tomorrow night Asia session. Maybe I will have another hour, another 7:30, or maybe 7:30 p.m. to 9 again. And then Thursday, if I can do live on Thursday, if the market is not that volatile, maybe I'll have maybe I will have a maybe I will do live session on a New York, so that you can see how will I execute this strategy. Uh, thank you so much. Thank you so much, guys. Right? Bye. Keep it up. Keep it up. I think the market will still go down, but be careful of 20,500 level. Okay? Just be careful, because I think this 20,000 and 20,000, 530 and 500 is the tonight consolidation range. So yeah, so try to be careful. We're not expecting the price to move drastically, or move or to I'm not expecting the market by this Asia session to reach this 20,450. I don't think so. But I think the market will just keep on uh, moving up and down on this level. I'm wrong. Maybe I'm wrong. I just don't know. But yep, be careful of because I feel like the the market will. I'm on my bias really. Actually, I'll tell you, my bias really tonight is bull. I feel like more on bull. I think yeah, I'm more on bull side actually. Most likely the price will break this level here and then will continue to continue to go up. I'm more on bull tonight, but we are consolidating, so we don't know, right? Well, thank you so much, guys. See you. See you. Bye.